Have you ever heard investors say we're in a bull market or watch out, the bears are coming? What do these animals have to do with your money? Today, I'm breaking down bull markets versus bear markets in the simplest way possible. Let's dive in. First, let's talk about the bull market. A bull market is when stock prices are rising, typically by 20% or more from recent lows. Think of a bull attacking it thrusts its horns upward. That's exactly what's happening with stock prices, they're going up. During a bull market, investors are optimistic. The economy is usually strong, unemployment is low, and people are confident about the future. Everyone wants to buy stocks because they believe prices will keep climbing. Now, the opposite. A bear market. This is when stock prices fall by 20% or more from recent highs. Picture a bear swiping its paw downward. That's your stocks going down. In a bear market, fear takes over. Investors are pessimistic. The economy might be struggling, and people start selling their stocks. It's a scary time, but here's the truth: bear markets are completely normal. They're part of the investing cycle. So what's the key difference? Bull markets are characterized by rising prices, investor confidence, and economic growth. Bear markets mean falling prices, fear, and often economic recession. Here's an important stat. Historically, bull markets last much longer than bear markets. The average bull market lasts about 4 years, while bear markets typically last only about 10 months. That's good news for long-term investors. Let's look at real examples. The longest bull market in history, from 2009 to 2020, 11 years of gains after the financial crisis. The S&P 500 went up over 400% during that period. The most recent bear market, 2022, the S&P 500 dropped about 25% as inflation soared and the Fed raised interest rates. But guess what happened next? The market recovered and started climbing again. So what should you do during these markets? In a bull market, it's tempting to go all in, but don't get greedy. Stick to your strategy and remember what goes up can come down. In a bear market, don't panic sell. History shows that the market always recovers eventually. In fact, bear markets create the best buying opportunities. Warren Buffett said it best: be fearful when others are greedy, and greedy when others are fearful. Bottom line, bull and bear markets are natural cycles. Understanding them helps you make smarter decisions and avoid emotional mistakes. The key: stay invested for the long term, and don't let the bulls or bears scare you away from your financial goals. If you found this helpful, hit that like button and subscribe for more simple finance breakdowns. See you in the next video.